I'm Charlotte McLeod with investingnews.com, and here today with me is John Rubino. He writes a newsletter on Substack that probably many viewers will be familiar with. Thank you so much for being here. Great to have you once again.
Hey, Charlotte. Good to talk to you again.
Really good to be catching up with you. And as we're saying before we turn the camera on, there's so much going on right now. I thought where we could start is with gold, of course, and maybe with a little bit of a broad question. I was looking back to our previous interview, which was all the way back in August of last year when gold was right about 2,500. So much has changed. I wondered if you could begin by helping us situate where you see gold in the current cycle after we've seen so much movement this year.
Well, gold has had an epic run, and it's been very quiet. I mean, it took forever to get above $2,000 an ounce. And then it seems like it went above 3,000 in the blink of an eye. It just did it, and nobody was really very excited about it as it was happening, other than, gold bugs like me who were watching it every day. But because it happened on a stage where a lot of other intense things were happening, because we had, NVIDIA and the other AI chip stocks going through the roof, and Bitcoin going up to $100,000. And so a lot of even bigger things were happening while gold was doing its thing. But now, gold is one of the few things that hasn't really corrected hard. And I'm going to jinx it. It'll probably drop back down to $2,000 an ounce if I start saying stuff like it's not correcting. But so far it's held up pretty well above $3,000 an ounce. And, I think that is true. The fact that gold is holding up better than most other asset classes for several reasons. One is the BRICS country central banks continue to buy a lot of gold because they still have their frustrations with the dollar being used as a weapon, and their desire to get beyond the reach of U.S. authorities. So they're thinking ahead to the days when they might set up a gold-backed trading currency for trade among themselves, so they can just bypass the dollar. And they've still been buying gold with that in mind. And then the other thing is the Basel III implementation. There are new banking regulations being implemented around the world, and they raise gold from a tier 3 asset, which isn't a great thing to hold, to a tier 1 asset, which is excellent for banks to have on their balance sheets. It's a very useful asset. It puts it, being tier 1 now, puts it in a class with treasury bonds and US dollar cash. So banks around the world are probably buying gold in anticipation of having it become a tier 1 asset on their books and then using it as a tier 1 asset. So that's a lot of demand out there. And that is a big part of the reason why gold has gone up steadily and without a lot of price sensitivity. You would think when an asset goes from $2,000 to $3,000 that you would have massive resistance at $3,000, because humans like round numbers, big round numbers. And so, a huge number of sell orders ought to be sitting at 3,000, but apparently not. Gold just broke right through that. So, and that's probably wise, because central banks and large commercial banks are out there doing things with gold in a non-price sensitive way. They're just buying it because they need to own it. And we'll see how long that goes. I think both of those factors, the BRICS thing and the Basel III implementation, are going to go on for a while. Those aren't things that just end one day and it's over. So I think gold still has the wind at its back, although it's going to correct, and bull markets always have corrections, but it's got the banking wind at its back, which is a good thing for it, at least maintaining its current price and maybe going higher from here.
I think you hit on a really key issue or question that I have when it comes to gold. So as you've outlined, it's got these really big underlying drivers that are helping propel and support the price. We've also got all these more, newsy, timely events that are happening right now, like tariffs, trade war tensions, inflation, interest rate discussions. How much do you think that those types of elements are playing into gold price rise right now?
Well, actually, yeah, that's a big deal for gold too, because gold is someplace you hide out in chaotic times. And we are in chaotic times right now. So people who are worried about, the the tariffs and the trade war generally causing prices to spike, causing, the inflation indexes to go way up, and that to destabilize the financial system, are probably buying gold too, just so they can hide out and not be affected by all of this stuff. So yeah, we live in a chaotic world. And, when we spoke a year ago, I probably said some things about the Ukraine war being very destabilizing because we're kind of blundering into World War III. Well, now that's less destabilizing. It's, they're actually talking, and maybe we get that settled pretty soon. But there's a lot of pressure on the U.S. government to start bombing Iran now. So we could start a different war in a slightly different part of the world that has its own chances of causing World War III. And that's very destabilizing too. So that's the kind of thing you buy gold for. If the U.S. is getting ready to bomb a major oil producing country, then you want as much of your portfolio as possible to be in very stable assets or places. And so gold fits that bill too. So yeah, it's got a lot of stuff going for it right now.
Yeah. Great point about all this geopolitical instability where you might have one hotspot that's dying out only to have something else pop up, or multiple something else's pop up somewhere else. So yeah, very, very difficult to keep track of all those things right now. I wondered if we could take a look at the US economy and the recession question. This was another topic that came up last time we talked, and now we're seeing that really come up in headlines. At least I'm seeing recession question. Is it going to be something that's worse than a recession? So curious to get your take on where we're at there.
We were always headed for a recession right about now because during the pandemic, people build up a lot of excess savings. The government said, well, you don't go to work, but you don't have to pay rent or your student loans, and we'll send you these stimmy checks. A lot of people ended up with more cash in the bank than they started with. And in the ensuing few years, Americans spent a lot of that extra cash, and that supported the economy. Now that's all gone now. Now we're into negative territory, by the measure of excess savings. It used to be $1.3 trillion, and now it's negative several $100 billion. And to make ends meet, a growing number of people are putting day-to-day life on plastic. So you're seeing credit card balances go up and credit card defaults go up. So a growing number of people are carrying debts that charge them 25% a year, which is that'll bankrupt you in a very short time, and hence all the growing defaults on credit card debt. So that's the kind of thing that normally would contribute to a slowdown that might turn into a recession. Meanwhile, you got housing, where the housing market in the U.S. is basically frozen because home prices have gone up to a point where they're unaffordable for almost anybody. The average American can't come close to buying the average American house. So home sales are very low. There's really no economic action being generated in residential real estate right now. And that is the kind of thing that contributes to a slowdown, maybe a recession. So we got stuff like that going on, plus trouble in commercial real estate, office buildings in particular, because nobody wants to go back to work after working at home during the pandemic. Offices are empty. They're not generating the cash they used to, and a lot of the paper related to those office buildings lives on the balance sheets of local and regional banks. So we could have a banking crisis when a bunch of office buildings start going bankrupt or being sold for crazy low prices. And that could easily, if that happens with a few banks, that spooks the depositors of all the other banks, and you get a kind of a runaway banking crisis. So add all that stuff up, and a recession is to be expected. But leaning against that is the fact that the U.S. government is running massive deficits right now, crisis level deficits. And that is stimulative when the government borrows $2 trillion and throws it out into the economy. So that's part of why we aren't just in a really deep recession right now. But I still think there's a decent chance of, even leaving the tariff stuff aside, that we would be drifting into a recession right now. And then you throw in a global trade war, and something worse than a depression worse than a recession becomes very possible. So we could have a slowdown and an equities bear market that normally comes with a slowdown, and maybe have it not just bottom and start to get better again within a year. It could be something that is much more serious, like the Great Recession, 2008, 2009, but with much bigger numbers, because we're more deeply in debt now than we were back then. So worse things could happen if we have an equities bear market and, banking issues like we had back then. So I think that the way you respond to that obviously is, like we said, with gold and silver, but also maybe shorting. I think, if you watch the movie The Big Short, people in that movie saw an imbalance that was going to cause trouble for the economy. They bet against the system then. They shorted the banks, and they shorted a lot of real estate related debt. And it didn't work out right away for them, but they made life-changing money in the end. And I think we're headed for another thing like that, where there's a big short out there waiting to happen. And just for fun, people could consider having like 3 to 5% of their assets in put options on the S&P 500 or the NASDAQ or something like that, just for that big sharp V-bottom crash that could happen when some of these things start going wrong in a big way. And, or you have put options as protection for the stocks that you continue to own. Sometimes it's a time to be short one way or another, either for, to roll the dice and try to make serious money, or to, protect yourself with insurance. This feels like one of those times, when things are just chaotic enough that you could have a brutal bear market that comes out of nowhere and happens very fast. And if you've got put options, you're glad you had those options at the time.
Yeah, I like that you present that as the just for fun option here. I think that's an interesting way to phrase it for sure. So we have all this mess in the US, and we've got debt piling up, etc. What do you make of the cleanup efforts that the Trump administration has begun? We have Elon Musk with DOGE. I know that's faded from headlines, or so it seems, as other things are going on. How successful have they been, or do you think they could be in this scenario?
Well, they can't, almost by definition, be very successful in cutting government spending, because the vast majority of government spending is Social Security, Medicare, the military budget, and interest. And can't do anything about interest except force interest rates way down, which would have a whole separate set of outcomes. But it's very hard to cut entitlement programs once they're in place. And so I don't think DOGE is going to succeed in taking a meat axe to Social Security or anything like that. But what they are succeeding at, and I think it's really spectacular success, is they're identifying the grift that was going on. Basically, what we've been doing as a society, we have this political class that got a hold of the spending levers, and they basically set up a system that enriches them. For instance, the government allocates a lot of money, or creates it out of thin air, sends it to an entity like USAID, which then funds a bunch of NGOs, non-governmental agencies, or non-governmental organizations, sorry. And then those things go out and hire a whole bunch of political operatives, pay them great money to, quote unquote, do charitable works and things like that. But they hand out maybe 10% of the money that's coming in to the actual beneficiaries of whatever charity we're talking about. And then the rest of it is overhead, which is sinecures, basically simple, very good paying jobs for people from the political class. And that is happening everywhere, with not just billions of dollars, but hundreds of billions of dollars. And DOGE is digging that up. It's naming names. And to the extent that they follow up and close down a bunch of this corruption, then that's an incredibly good thing. And it'll save us some money. It won't prevent the gigantic currency crisis that is inevitable with all the debt we're taking on, but it'll, at the margins, lower the deficit a little bit. And we'll go from $2.2 trillion to $1.9 trillion a year and deficit spending. That won't save us, but it'll be something. And to the extent that it gets rid of a lot of corruption, that could be a very big thing because, you really want to clear out this whole class of people that do nothing. The guys in the think tanks and the people in the NGOs and the people in the charities that, the Clinton Foundation or something like that, which basically does nothing except take in illicit deposits, which are really bribes. And, it goes on and on like that. If we close down those entities and we force this political class of quote unquote experts to go find real jobs, the world would be a better place if all of those guys were driving Ubers right now or making coffee at a coffee bar, because those things at least help people in the real world. And what they're doing now helps nobody; it just enriches them. So, sorry, that was a diatribe, but there are good things happening, and they're surprisingly good in the sense that we didn't realize how big the corruption was, and now we do know, and that is a huge deal, and it could lead to positive changes in the future.
Yeah, I think that was a great answer. So the problem is massive and we can't solve the whole thing, but it doesn't mean there can't still be good to come from this. I think that really illustrates it. So we've been talking a lot about what's going on in the US, which makes sense because it's so central to everything that's going on now. But we spoke before about the growing crisis in the overall global financial system. So I want to touch base on that. I know that's a huge topic, but it feels like that's something that's probably being accelerated toward right now. Is that your feeling as well? How are you thinking about that?
Being accelerated to war?
Toward something that's being accelerated. Okay. Yes.
Oh, yeah. Yes. Yeah. There's the short version of the process that's been in place for a while. In 1971, we went off the last vestige of the gold standard. So every major currency henceforth was a fiat currency. It existed and has value because the government says it does. That's what fiat means. It's kind of a government order. And since that time, the big countries of the world have had unlimited credit cards. They've been able to spend as much money as they wanted to and just borrow it, And so that Europe's been doing it. The US has been doing it. Japan, China, everybody at different speeds at different times has been taking on insane amounts of debt. And now we finally saw the inflation that was inevitable. In 2022, we had double-digit inflation in the U.S. That spooked everybody, forced us to raise interest rates, and now all of our debts are actually charging us interest. And so the interest cost on the U.S. government's debt and Germany's and Japan's is all soaring exponentially. And, the U.S. government now has to pay about $1.5 trillion per year in just interest. And that's basically the death spiral, because when you have to borrow to cover the interest on your debt, which is where all the big governments of the world are now, with the exception of Russia, then you're in a death spiral, because you borrow to cover your interest. And that means the deficit is bigger next year, and you have to borrow even more to cover even more interest on the ever-growing debt until you go bankrupt. And that's the world's economy right now. We're headed for bankruptcy at an accelerating rate. And the question is, how does that bankruptcy manifest? We can't avoid it, but we can have different versions of it. The 1930s style deflationary collapse, or the Weimar Germany hyperinflation, things like that. It has to be, one of those two templates that we choose. And then we'll end with, Jim Rickards' version of a currency reset, where, we see that this isn't working. We have another version of Bretton Woods where we get together and we recreate the global financial system, hopefully along, sustainable lines. But and how that plays out really depends a lot on people who don't understand what they're doing under huge amounts of pressure or making decisions, so it's going to be chaotic unless a miracle happens and really smart people happen to be in charge just as this thing really comes to a head, and then understands that they need to get to a gold standard or something similar as quickly as possible. You have people in the Trump administration who are kind of gold bugs. They're talking about having government bonds that are backed by gold. And one of the people, Judy Sheldon, who Trump actually nominated for a Fed governorship. She didn't get it, but she seems to think that we should just go back to a gold standard, So it's conceivable that the people around Trump talk him into, and I think the Treasury Secretary also said his main asset is gold right now. So, it's conceivable that the U.S. government just announces on a Sunday night sometime, just as inflation's really getting going and things are getting chaotic, and says, well, from now on, we're on a gold standard. The dollar is just a name for 1/10,000th of an ounce of gold. And we stand ready to exchange dollars for gold at the request of anybody who's a citizen, something like that. And that would put us back on a sustainable monetary system, but it would cause chaos because everybody who trusted the government would be royally screwed by something like that. Their savings would have lost 2/3 or 3/4 of their value. So we'd have to put up with the civil unrest that flows from that. But that is by far the least painful option. Everything else is so much worse than a lot of angry savers who have to be mollified in some way. The civil war is one of the options if we don't get the monetary reset right.
Well, I like that you present all the different scenarios that we could have. And of course, a miracle is very rare, but you're right. It does seem like something that it could possibly, the pieces are perhaps in place. So we'll see how that goes. I wanted to also make sure to ask you about the gold stocks. So last year, a big theme for the gold stocks was the disconnect between what they were doing and how the price of gold was performing. And we've entered earnings seasons, and the high gold price should be being reflected in the results for the big miners. So any takeaways that you would share from the initial results that we're starting to see?
Well, yeah, gold stocks did not respond like they normally do when gold started to go up. Gold broke through $2,000 an ounce, and normally, based on history, you would think the gold stocks would just rocket when something like that happened. They would be going up multiples of the percentage increase in gold. Didn't happen. Gold stocks just languished while gold continued to go up. And part of the reason for that was that the cost of mining had gone up dramatically in the last few years. So yeah, the gold miners were making more for every ounce of gold that they sold, but they were also paying more to their employees and for the gas and diesel fuel that it took to run their big equipment and everything. And so their profits weren't really rising along with gold. But finally, just lately, gold went up enough to basically swamp the increase in gold mining costs. And now you're seeing the gold miners report some really nice widening of their margins and more cash flow. For instance, just within the last few days, Newmont and Agnico Eagle, which are two of the three biggest gold miners, reported blowout earnings. Just really nice increases in their earnings per share and big increases in free cash flow. And so both of them are now able to do shareholder-friendly things like raise their dividends and buy back stock on the open market or make strategic investments in other companies or acquisitions or whatever. And so that's starting to get people excited. So those stocks are starting to have nice runs. I think Agnico Eagle is up maybe 60% in the last year and Newmont 50% or so. Not spectacular, but still nice positive runs that we've been waiting for a long time. And if gold stays where it is, the next set of earnings for Q2 will also be great. And then you'll have a pattern. It won't be just, 1 quarter of good numbers. It'll be a trend. And the generalist investors who look at trends and buy momentum will start zeroing in on the gold miners. And they might be almost the only industry 6 months from now that are putting up really good sequential and year-over-year numbers. So you might see a lot of generalist money start pouring back into precious metals. And, the miners seem big, but they're not in the aggregate. There just is not that much market cap in the gold mining sector, so that if generalist money, which is vastly bigger than what's in gold miners right now, starts moving in that direction, it won't take much. It won't take a big percentage of investable capital out there in the world flowing into the gold miners to just send them through the roof. So they could be one of the success stories of the next year or so as they generate more and more cash, buy back more and more of their stock, and generalists catch on to this and start jumping in. So that's the best case scenario. That's the fun scenario for the gold mining stocks. And, it's completely reasonable because they are putting up numbers that in normal times would get people excited. So here's hoping.
Yeah, I was definitely going to ask you about that generalist interest and when we might see it return. So that gives a good idea of how that could flow into the space. Curious to know, I know every person is different, but where you're seeing the most potential for gold stocks right now. It sounds like maybe if generalists are going to come in and go first to the miners, that maybe the miners at the top end are the best place still to be right now. But what are your thoughts?
Yeah, the big ones will attract the early generalist money because those are the names that financial advisors know when their clients come and say, I need gold stocks. They'll buy you some Newmont or some Agnico Eagle or something. So money goes there first. But the big guys have so much free cash now that they're going to start acquiring smaller gold miners. And so the acquisition activity will be probably in the sector of the junior mining space and the developer space where there's growth. If a small miner has a potential world-class deposit and it's starting to mine it right now, then a big miner will come in and swoop them up for a nice premium. And that is happening now as we speak. I just posted something today on that, on Substack. And, it doesn't take a lot of that kind of acquisition out there, 3 or 4 of them where it's at 70% of the average price in the last 2 weeks for the stock that's being acquired. Stuff like that gets people excited in a hurry. And so then the money spreads out throughout the mining sector. But, that's over time. I think the big guys will go up, and then the real pure takeover candidates, the tier 1 assets, or the smaller miners who are producing profitably right now and can be kind of bolted on to a big miner in a way that moves the needle. There's a lot of them out there. So I think that's the intellectual challenge, is to find the ones that get bought out first, and that's not easy. But the people who are there waiting for this to happen will make a lot of money.
Yeah, definitely. That's the hard part there. So that's what's going on with gold stocks right now. I think that gives a good idea of your thoughts. So we had that frustration with the gold stocks last year, and where I still think we have frustration is now over in silver. So curious to get your thoughts on what's going on with silver. I know we've got the gold silver ratio at a very elevated level right now, and people are wondering, okay, so when is going to be silver's time to move? What are your thoughts?
Well, silver is a great story because it's an industrial metal that's already in deficit. The world's silver mines don't produce enough silver to satisfy the missile makers and the solar panel companies and all the other people myriad people who use silver. So there should be upward price pressure on silver as the deficit continues and maybe turns into a shortage, just from the industrial side. But silver is also a monetary metal, right? And it trades, like you said, in a range with gold, where maybe from a gold ratio of 30, that's how many silver ounces it takes to buy a gold ounce, up to 80 or 90 or something like that, and the higher that number goes, the cheaper silver is relative to gold. And 90, where it takes 90 ounces of silver to equal an ounce of gold, is usually a screaming buy signal for silver, because it means it's at the top end of its range or at the bottom end of its price range. So it's very cheap, and it's going to outperform gold going forward. So all gold has to do is sit there, maintain its price, and silver should go up when it's at 90 or so. Lately, it was over 100. So that is a screaming buy for silver. historically, whenever silver gets up to 1/100th of an ounce of gold, or down to 1/100th of an ounce of gold, usually it gets bought up. And gold or silver goes up in percentage terms much more than gold does. Usually that happens in a precious metals bear market. So it's both of them going up, but silver going up more than gold. And I think that's a completely believable scenario going forward because, silver is, because it's in deficit, we're using up the previously existing silver. And that means there's just less of it around for somebody like the COMEX to satisfy futures contracts who show up and want to turn their contract into silver. And so there's a real danger of something happening on an exchange where the exchange just can't make good with physical metal for the demand from futures contract traders, and they default. In other words, they pay in cash instead of in silver, and then everybody in the world sees that and says, "Oh, we're out of silver," and so then the panic buying starts. And I think that's a very possible part of the silver story going forward. And I think that $100 an ounce is. It would be shocking if we didn't get there somewhere along the way. And it's possible that much higher prices could happen when the panic buying starts. So we'll see. But I think, if you're a stacker and you're trying to decide whether to buy silver coins or gold coins right now, I would say silver is the better buy relative to gold, although you should probably be buying both if you're able to.
Yeah, I think that's a very fair statement there. Okay, so we've gone through gold and silver, I think, pretty well. I'll let you go, but before I do, any final thoughts that you would leave investors with? I know it's a very tricky time right now.
Yeah, a couple of things. One is, it's not just about investing, because there are so many things we should be doing with our lives that probably fall under the category of prepping, right? If the world is going to get very chaotic, which it is one way or another, we should be as self-sufficient as possible. So besides stocking up on gold and silver to protect your finances, you want to make sure you're indispensable at work, and make sure you know as many people in your community as possible, so you've got their back and they've got your back, and learn how to grow some food. Designate somebody in your family as the family gardener and have them try to grow 1/3 of your grocery bill or something like that, and those are all things we should have been doing all along, but now it's more necessary than ever. And the other thing is that a healthy psychological way of looking at all this gloom and doom is to think of it as an investment thesis. Because, all this crazy stuff is happening out there, but if you play it right, it can make you rich, and that is so much healthier than just looking at the world and thinking, "Oh my God, everything's falling apart. This is terrible," and just wanting to curl up in a ball, and whimper. But if you think of it as, okay, $10,000 gold, I will look forward to that, and then so you can get through this stuff with a better attitude, and that's crucial. Your attitude in chaotic times is your most important asset. And if it's positive, you're in better shape than otherwise.
Okay, I think those are really good reminders to end on. You can't just focus on your gold and silver, although that's part of it. Got all these other different elements to keep track of as well. So thank you so much for coming on once again to go over your thoughts and share all these ideas with us.
Thanks, Charlotte. Enjoyed it.
Of course, once again, I'm Charlotte McLeod with investingnews.com, and this is John Rubino.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.